My name is Giarda, co-founder and GM of Monad Foundation, and you are watching Taking Stock.
2 minutes to go here into the close on this Tuesday, January 13th. The tail of the tape is one of a little bit of profit taking across the major market indexes here today. Energy, staples, and real estate, those are your strongest performing sectors in the S&P 500, but we do have losses to the downside on this Tuesday, being led by financials, telecom, and discretionary stocks. Welcome to the show, one and all. You're watching Taking Stock. I'm your host, JD Durkin, mere moments away from the ringing of the iconic closing bell, and today is, in fact, our 100th show, and the crowd goes wild. Volatility up on the day. Silver trading up to an all-time high of $89 an ounce. Oil benchmarks continuing their push higher. WTI as well as Brent crude benchmarks both up about 9% over the course of the last 4 days. We got less than a minute or so until the bell. The Dow 30 components, your big winners for the Dow today include Walmart, 3M, and Caterpillar. Your laggards in the Dow, however, Salesforce, JP Morgan, as well as Visa. We'll talk a lot more about both of those names as bank earnings kick off here on Wall Street in just a bit. Catching a bit on the day, oil and energy stocks, defensive and aerospace stocks, as well as semiconductors. The team from PAG Bang, ticker symbol PAGS here at the big board. The crowd is fired up. They are fired up to bring about a close to today's trading action. Time now for the bell here at the New York Stock Exchange. I gotta say, really, that is the way you strike the gavel. I've been here for hundreds, if not thousands of these. You gotta do it with some authority. Final tail of the tape on this trading Tuesday. The S&P down 0.2%, pardon me. The Dow down 0.8, the NYSE Composite Index down about 0.2, and the small caps are down 0.1% as well. Advance to declines telling us the tape slightly negative breadth, all things considered. Volume favoring the downside, but new 52-week highs here at the NYSE outpacing 52-week lows. Let's bring in, without a doubt, one of my favorite guests. Let's be honest, the great Jay Woods of Freedom Capital Markets. I don't even want to talk about stocks because not only is it our 100th broadcast, it is the great Jay Woods' birthday. Happy birthday, bud.
Yeah, happy birthday, happy 100th to you. It's a privilege to be the 100th guest, although really not, because I've been on the show quite a few times.
Yeah, you have.
Congrats to you and the whole team behind the scenes. They do a great job.
So we did have all-time highs yesterday. A little bit of profit taking here, so we don't have another all-time highs for your birthday. But when you look up,
yeah,
what do you see
I wanted that. I wanted
down
down 50,000 for the birthday. We didn't get that, but what do we see? We see a little bit of a pullback, a healthy pullback. People expected us to get a little bit of a rally on that CPI number, coming in slightly cooler than anticipated. Look, I'm learning from JD and bringing my notes with me.
Man.
I won't read them though. I memorized mine. But no, what we saw was a little bit of a pullback, a lot of drama, a lot of headline risk. What we're watching for now, one, we do have real data. Okay, we got the CPI, it was slightly cooler. That was a good thing. But what didn't happen? The odds of a rate cut. The odds of the rate cut remained 5% for this January meeting, and then the further months did not increase either. So no one thinks that this number is going to get the Fed to cut rates anytime soon. There's a little more drama going on with the Fed that we would like to see end, and I think that will come to an end very soon, and nothing will happen, and Jerome Powell will be fine. But when you hear the news that the Fed chair may now be replaced for cause, the markets don't want to hear that. They don't really care for it. Will it have an impact over the long term? No. But what we are watching now is earnings. We got them with JP Morgan and Delta today. Not as good as we were hoping. A little bit of a slight miss on one or the other side, revenue and earnings, depending on which one you're looking at. And now we focus on the financials the rest of the week. We've got Goldman, we've got Morgan, we've got Citibank, we've got Wells Fargo, and then we have a great transport in JB Hunt, which trades right over here. And then we've got regional banks on Friday. So we've got a lot of earnings to digest, and I think that's what the market's going to want to see. Is that growth continuing? And I believe it will.
Jay, what are some of your biggest questions for the big banks? Is it net interest income for the quarter? Is it the health of the underlying consumer? What are you going to be
Yeah,
tracking as
well,
we get Wells and Citigroup, et cetera?
For me, it's trading. And trading revenue was up through the roof across JP Morgan, and that's what Goldman and Morgan had seen the last quarters before. But net interest income, always something that people are monitoring with rates. But rates have been relatively stable, so that's not going to be too much of a shocker. JP Morgan got hit on the Apple Card. I didn't really dig too deep into that, but I expect Goldman, I expect Morgan to do extremely well. What I want to hear is less pessimism. Jamie Dimon, very much the conservative traders talking about some of the headwinds, which are understandable, but the market doesn't want to hear that. They crush it on earnings consistently over time. The stock will bounce back, but when you give all these dire warnings, it kind of scares the market a little bit, and we saw that today.
How much or how little should the average retail investor pay attention to the kind of palace intrigue over the Fed? I thought that was a remarkable statement Sunday night out of Jerome Powell, maybe trying to get ahead of some negative headlines into the print yesterday morning. But man, oh man, we got the Lisa Cook case. I mean, the drama surrounding monetary policy, I've never seen it higher.
Yeah, we could do a whole show on this because I am a student of Mr. Powell. The fact that he came out with his own video, he was prepared for this. He's been proactive to fight it. And then the other Fed chairman, the three Fed chairmen alive, Bernanke, Yellen, and Mr. Greenspan, still alive, they all came out with statements, backing him, and now the ECB leaders came out with statements. So this, to me, is about the independence of the Fed, and I think the administration is slowly pulling back from this narrative, and it will be a nothing burger of a story, but the initial reaction was to sell off a little bit yesterday, and then we followed through today.
I'm about out of time, but I'd love to plug your newsletter. One of my favorite things in your newsletter this week, the photo of the late, great Art Cashin rocking the Dow 10,000 hat in March of 1999. What a gem you included.
March of 1999. I was right here. They were throwing hats off the balcony. They did it the week before, and as the market closed, the Dow ticked below 10,000. They wanted the hats back. I grabbed my hat then. I still have it. I will break it out when we hit 50,000, and hopefully don a 50,000 hat as well. But yes, the great Mr. Cashin, that Dow 10,000 hat. A lot of history here, and we hope to make some more history very soon.
You're not kidding. All the more so to celebrate a great birthday for a great man, Jay Woods. Good personal friend of mine, good personal friend of the show. You're welcome back anytime. Happy birthday, bud.
Thank you, and happy Hun 100.
Yeah, good to have you. Joshua, grab your mic. Howie, you and I are going to head this way for a walk. Excuse me, one and all. Jay Woods and I were just chatting there a moment ago. Pardon me, folks. I'm going to come through with this big, clunky camera. Thank you. We're going to come, heads up, thank you. There we go. Thank you so much. I appreciate that. Jay Woods and I were just talking about JP Morgan's quarterly results, as Jay correctly alluded to. A miss on the top line, a miss on the bottom line, and a bit of a hit overall to net income. JP Morgan, Jay just talked about this, absorbing that massive Apple credit card program off the balance sheet of Goldman Sachs. Shares are down so far here in 2026 for ticker symbol JPM, but they are up about 30% over the course of the last 52 weeks. We will see what the rest of the big banks have to say here on Wall Street. We got a lot of those earnings crossing the wire tomorrow morning. Time to look at a few NYSE notables before we take a quick toss to break. First up, L3 Harris surging to a fresh all-time high for the big defense giant following news of a $1 billion Pentagon deal. Also plans to spin off its missile solutions business. Just a few weeks ago at the end of December, Morgan Stanley analysts upgrading the stock from equal weight to overweight, also boosted its price target from $350 up to $367. Shares of L3 Harris up already 16% here in the young year of 2026. And finally, Howie, let's spin around this way. We'll take a look at the S&P 500 equal weight. It finishes just about flat here for the day, but the S&P equal weight hitting a fresh all-time high. The broadening rotation, equal weight has much higher exposure to industrials than the regular S&P 500, and industrials is the second best performing sector over the last year, only beaten by technology stocks. This indicates a healthy rally overall, mean reversion versus the more consolidated positions you tend to see with the traditional S&P 500. Yesterday, here at the New York Stock Exchange, I sat down one-on-one for an interview with Dr. Patrick Soon-Shiong. He is the executive chairman of Immunity Bio and NantWorks. Take a look. Dr. Patrick Soon-Shiong joins us now here from the New York Stock Exchange for a one-on-one interview. He is, of course, the executive chairman of Immunity Bio, founder of NantWorks, as well as the owner of the LA Times Media Group. Sir, it is a great privilege and a pleasure to have you here today. So let's start with this. NantWorks and Immunity Bio partnering for the first of its kind U.S.-Saudi Biotech Alliance Summit. What problem is this event designed to solve that other global health forums have not?
I think really what this is going to solve is really action. So this has been in the making for the last 2 or so years, where patients, whether they in Saudi Arabia, Middle East, Africa, and the United States, could access innovation and technology in real time. So it's about action and really the reveal of breakthrough technologies.
Why do you think now is the moment for a formal U.S.-Saudi biotech partnership like this? Have things changed? Have they evolved, I wonder, in even just the last few years?
Yeah, it has evolved from the sense that I was present during President Trump's first visit to Riyadh and Qatar, and had the pleasure and honor of meeting with the president and MBS. I had the opportunity then to meet with every leadership at the highest level. And that evolved to the point where it was very clear that Saudi Arabia wanted to establish itself as a biotechnology hub, but more importantly, deliver care in real time of technologies that we invented or developed in the United States. I shared with the president that transferring technology in healthcare and curing cancer and infectious disease is an amazing policy for world peace. And that's after work, several years, we're about to execute and present that at the summit.
How do you most hope this summit moves from diplomatic dialogue to real execution?
Because it's already in real execution. That's the difference. This is not a summit of dialogue. We've had multiple private meetings and dialogue. I don't believe that we need to do think tanks anymore. We need to have do tanks. And this summit is about doing and actually seeing results, and actually results that have already been transpired in the United States and the rest of the world, and then shared with the Saudis.
We don't need think tanks, we need do tanks. I love that phrase. Thank you for that. Let me ask you a bit about the geopolitics of this all, Doctor. We talk a lot about national security. How is biotech now being treated as strategic infrastructure, and how has that space evolved, I wonder?
Well, when you think about what's going to affect the world, and we can talk about that at the summit, we worry about radiation, we worry about bioterrorism, we worry about infectious, we worry about chronic diseases. And Her Royal Highness will be attending Dr. Haya Al Saud, who really talks about, instead of just lifespan, we need to have health span. The opportunity now to take truly breakthrough technologies and actually transform them into real treatments that has already been tested, but also taking advantage of AI, technology, robotics, all of this. And this is why I think, as a national security perspective, we need to have national preparedness, what I believe, sadly, for the next pandemic. Now, that pandemic could be either the infectious diseases. There's talk about the Permian frost melting and viruses that we've never seen, ancient viruses evolving. And more importantly, is COVID cancer? Is there a pandemic of cancer that's about to occur? All of that is national security, and us as a nation have to prepare. And I'm pleased to say that the U.S. administration is sending some very senior officials to the summit to discuss our need for national preparedness.
I wonder how you're positioned on the regulatory alignment of all of this, Dr. Soon-Shiong. We certainly know that can be among the bigger bottlenecks and headwinds to any progress. How do you speed that up without cutting corners?
Well, you're right about not cutting corners, but having said that, if you show that, in fact, you take a patient who would otherwise die in 7 to 9 months and they're alive now 5 years, you take patients across multiple tumors and they're still alive. So data speaks. It's so important to have data. And what we'll be revealing at this summit is we've opened the randomized clinical trial of lung cancer. And we have patients with third-line, fourth-line lung cancer, where we've now prolonged survival up to 25 months and patients up to more than 3 years. So that where data speaks, and importantly, cancer's a war against time. I've been struggling openly with the FDA, the current FDA, to inform that this is an urgency. And you will hear some news from the Saudis, how they have actually not only accepted that, reviewed the data in great detail. And there'll be some very exciting news that we present on the 14th.
Dr. Patrick Soon-Shiong is the executive chairman of Immunity Bio and founder of NantWorks. It is great to have you here today, sir. Thanks a lot for taking the time.
Thank you for having me.
Welcome back to the broadcast. You're watching Taking Stock here from the NYSE. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence that you need to know for your Tuesday. First up, the crypto majors all up in no uncertain terms. Bitcoin trading up 3.5% on the day, ETH up 3.8%, and Solana up 3.6%. Next up, U.S. senators are pushing new legislation on Capitol Hill that would shield crypto software developers from being treated as money transmitters. This as lawmakers race to advance a broader digital asset regulatory framework. And finally, Polygon Labs is set to acquire CoinMe and Sequence for more than $250 million, adding regulated U.S. on and off ramps, wallet infrastructure, and cross-chain payments to scale stablecoin transactions nationwide. Perfect way to tee up our next guest. Say hello to Sam Fagan. He is the head of U.S. payments at the aforementioned Polygon. Thank you for being here.
Great to be here, JD.
And congratulations on that last. See the way my producers did that? That was the last read, and then we bring you in. Talk to me all about that. What does that even entail for huge deals like that to come together?
Yeah, so look, what we're building right now is a vertically integrated payment stack for enterprises and banks. So now, in addition to Polygon being a blockchain that's always been the settlement layer, now on top of that we'll be able to offer compliant infrastructure such as wallets, in addition to having coverage for fiat access to on and off ramps. So card payments, ACH, local bank transfers, now will really be in the value chain really from the blockchain layer, and now building on top of that with wallets and fiat rails.
What do you feel like you could not do previously that you can now do, at least a little bit better, now that the deal with Sequence and CoinMe is moving forward?
Yeah, so since the regulation for the Genius Act has passed, we're seeing a lot of enterprise adoption. And really we've had conversations about folks looking to move money on chain, that being enterprise and fintechs. Now we're really to provide turnkey infrastructure within one API, so we're really a one-stop shop for all your payments needs on chain.
How are you approaching volume versus revenue and the ultimate building on Polygon scale?
Yeah, that's a great question. As far as scalability, we'll always look to optimize the network for speed and efficiency, but revenue is definitely a big component as we're looking to scale our business.
Adding CoinMe's licenses and access, how big is that for a differentiator after this deal finalizes?
It is a massive differentiator for us. When we approach enterprises, they're always talking about compliance and security and reliability. Now with CoinMe's infrastructure, whether it's the license, whether it's the fiat access, we're now able to really offer a turnkey solution to our partners.
In what ways did regulation, the rules of the road, shift for your industry in 2025? And a really important follow-up to that, I think. In what ways do you hope there are further changes here in 2026?
Yeah, no, absolutely. For regulation specifically that's coming up, can't really speak to that, but as far as what we have currently in place, enterprises needed this to really come into the market into a big way. It really creates a lot of efficiencies for them when they're moving cross borders, giving their users and merchants access to dollar rails and financial services. So the regulation was huge for enterprise and fintech adoption.
Do you feel confident that policymakers and lawmakers alike have learned to take these conversations a lot more seriously as of late?
Absolutely, yes. We're seeing it quite a bit on our side.
Yeah, absolutely. Talk to me about some of those key changes that have really emboldened you in the industry overall.
Yeah, I think when we're talking to enterprise PSPs that historically have been not sure if they can move money on chain, now with the regulation, we're talking about settlements, we're talking about treasury management, multinational corporations where historically they'd have dormant capital parked overseas in bank accounts in which they might not want to hold the fiat or the local currency. Now they're moving money on stable coins to build efficiencies in treasury management for their companies.
Yeah, the only bad part about this interview is I have so many more questions, but I'm out of time, which means you'll have to come back at some point. It's been really good to have you.
Yeah.
Sam Fagan, head of U.S. payments at Polygon. Congratulations on the deals. Thanks a lot for joining us.
Thanks so much. Great
Folks, don't go anywhere. Much more Taking Stock coming up from the big board right after this.
Bye, guys.
Let's do it. Welcome back to the show. Time now for the latest headlines you should know on this Tuesday in the world of startups, raises, as well as rounds. First up, NVIDIA and Eli Lilly are set to invest $1 billion to launch a San Francisco-based AI lab aimed at speeding up drug discovery and medical research using advanced compute as well as advanced data models. Next up at this hour, BitGo seeking to raise about $200 million in a U.S. initial public offering on the New York Stock Exchange. I believe that's this place, as institutional demand for crypto custody grows and regulatory conditions begin to stabilize. And finally, the information reporting OpenAI is acquiring health record startup Torch in a deal valued at about $100 million, and in doing so, will bring its team and technology into the new ChatGPT health platform. Time for what is always my favorite part of the show, not just speaking with an amazing guest, but a guest whose team just rang the closing bell. This is Carol Corvala. She is the Chief Sales Officer at Pag Bank. It is great to have you here.
Thank you very much.
Of course, and congratulations for being here. Can I get your perspective on ringing the closing bell today? What was this like for you and your whole team at the bank?
It's very important for us. So it's been 8 years that we completed our IPO, and every time we come back here, we are reminded of something very important for our company. And when we are here and mailing at NRF, we like to invite some clients, some partners to share this, to remember and to share this special moment with them. So it's very special for us.
Could you talk to me a bit about some of the highlights for the bank over the course of the last 8 years since you first listed here at the NYSE?
So for sure, since we started here, we have many achievements. We foster business, we improved the bank features, product, servers, and the company continued growing. So it was really amazing for us.
Who are the bank's customers, your main clientele, for anyone watching the show who might be a bit unfamiliar with Pag Bank?
For talking about clients, so we have many clients. We are more focused on the small retail, so long tail, and we have some big clients. But I wouldn't like to say any client special here. But we have many clients on our list here.
I know that you're here in town, if I'm not mistaken, attending the NRF conference,
yeah,
which is amazing.
Sure.
We've been doing coverage here at the New York Stock Exchange the last couple of days. What is it like to be able to feature some of the top folks, the top people from your team at this amazing event in New York City?
This year we came with a huge team. We have many people from Pag Bank here with us, commercial heads from different segments, different areas that handle from small, medium, and large merchants for the company, and also heads from the product area, from our international segments. So we are here all together, for sure, for foster business, and also for see new tendencies, what's going on the market, new things that are happening all over the world. So it's been amazing to be here with all this team.
That's incredible. Congratulations on all the success over the last 8 years. We wish you all the best for many more years to still trade with us here at the New York Stock Exchange. And thank you for joining us.
Thank you very much for receiving us. Thank you.
Of course, you're welcome back anytime. Carol Corvala, Chief Sales Officer at Pag Bank. Thank you so much. Don't go anywhere. Much more Taking Stock is coming up after a quick break, including the latest from Scarlett Sieber at Money 2020. Don't go anywhere.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, because we got to break this down. It's always confusing. Today, we're going to be talking about Bill, the behind-the-scenes hero making some businesses pay their bills without losing their minds. Not an easy thing to do. Bill isn't flashy like crypto or BNPL. It's the quiet operator in the back office. Think of it like Venmo for businesses, but with a lot more zeros. Founded in 2006, Bill saw a pain point: small and mid-sized businesses drowning in paper checks and late payments. It was a thing. Fast forward, Bill is now a cloud-based platform automating invoices, approvals, and payments. This stuff is essential. So essential, in fact, that Bill is actually listed right here on the beautiful NYSE. So how does Bill actually make money? Let's dive in. First of all, transaction fees. Every time a payment moves through Bill, the ACH, card, or checks, Bill takes a cut. Subscription fees. Businesses pay monthly for access to Bill's platform. Float and interest, one of our favorite ways to make money here in finance. When Bill holds funds during payment processing, they earn interest on that money. Value-added services. Think expense management and integrations with QuickBooks or Xero. Bill isn't just about hype, it's about cash flow. One thing you gotta know about fintech: when you have the cash flow and controlling that flow, that means that you control the money. Do you have a fintech company or a company in general that you want us to break down and understand how they make money? Leave it in the comments and maybe it will make the cut. Back over to you.
Welcome back to the show. Tomorrow here on Wall Street on Wednesday. Lots of earnings to get through, as Jay Woods and I were talking about a little earlier on here in today's broadcast. Tomorrow morning before markets open, we'll hear the latest quarterly figures from Wells Fargo, Citigroup, as well as Bank of America. We also got a lot of economic data for investors out there to chew through, including the November retail sales print, as well as November PPI. That's the wholesale inflation print. We're still kind of playing a little bit of catch up after the historically long government shutdown. Final tail of the tape on this Tuesday, January 3rd, Jay Woods' birthday. The S&P 500 down 0.2%, the Dow 30 down 0.8, and the small caps down 0.1. That's going to do it for today's edition of Taking Stock. Have a fantastic Tuesday night. We'll see you again tomorrow.
Go Sexy.